Okay, so I hope it's recording my screen share. So again, we've got bi-weekly / semi-monthly. I think one can be used for either one. And then we've got weekly. And weekly is a little bit easier because you've only got less elements to fill in. The blue is what needs to be filled in. On the bi-weekly, you're going to have to figure out what period is their payroll going to hit. And then it comes to the question of what day do they fund for it? What day are you going to count it on your schedule? And you're going to have to plan that out. So I'm going to dig into that with this facility that's got his money already. But
it's like one of the questions on RootWorks this morning was the client got their loan funded Friday. Use that as an example.
And that's my guy.
Payday is Friday.
Yep.
Can they count that payroll?
Well, and that's I think this is where we're going to get into getting up on the left side of the horse or the right side of the horse and then stay there. Because I have tried to find a way, because May actually has 3 Fridays. So May is one of those months for biweekly payrolls that they're going to get hit 3 times. However, the way this works, it's 8 weeks, and I can find no instance, if you're consistent with how you apply it, that you can get an extra payroll into the 8-week period, even though there's 3 that hit in May. So, and that's where the question is: Are you gonna look at the check date? Or are you gonna look at what date it funded? Because, like for instance, Patrick Payroll, they're now funding 3 or 4 days prior to check date. So that's what everybody's gonna have to decide. And I think if it were me, I would probably put some notes up in my projection with these assumptions. I would probably put that up here. So let me just jot that down. Payroll date equals check date or funding date.
Right.
Something like that. You're going to want to make a note about that. But to go through how this works, I loan funded, what date did it fund, and then count the 8-week period after that. And I don't know if this is exact, so don't quote me on that.
Right.
Loan proceeds, you're going to plug that in. You're going to plug in how many pay periods per month they have. And I'm on the biweekly. And this is going to, again, this is, George and I were just talking about the FTE count. The bank that did these loans that I confirmed with, they're going to go back when it's time to ask for forgiveness and calculate FTE for the payroll that covers 2/15/2020. That's going to be your baseline. So I took my 2/15 payroll total hours divided by 80, because there are 80 hours in the pay period. This happens to be a semi-monthly client, and it was not an 88-hour work period. It was 80. So I physically counted all that out. This is where you can jockey with your plan. So look at this. We've got a tab for projections. We got a tab that's very similar for actual. Then down at the bottom, it's got the forgiveness calculation. And then I just threw this over here and didn't do much with it. If you want to review employee by employee wages to make sure nobody's got a significant change, I just threw something there.
Right.
So back on projections. So this you're going to toy with. Now, this facility hasn't really had to lay anybody off, but you can play with these numbers. And then the other pieces you want to plug in, again, this is for your projection. For me, what we've done is George and I figured, okay, we need 75%. And George, I found a flaw in our formula down here. I'll tell you in a second.
Yeah.
We need 75% of our loan to be payroll cost, 25% for other. What we've calculated here is, George, what we were doing is we were taking this number as our average monthly payroll divided by number of periods divided by FTEs. Right. It needs to be this, it's this number.
Right, it could be whatever, yeah.
So we figured, all right, this is just total loan divided by 2.5, so that should be your average monthly payroll. And so this is just what is your average monthly payroll divided by 2, so 2 pay periods divided by how many FTEs. A super rough calculation, but to me, good enough for an estimate and planning. You can dial it in more than if you want. And then figure out what is their health insurance as a percent of wages, retirement, and then SUTA. So we plugged in those numbers for that client, and then that feeds our projection. Now, the problem here, it's going to take a little work, is you're going to want to put these formulas in whatever week that you want it to hit, right? So think about that. And so that's going to be kind of an manual adjustment. And then also we did, and then this, you're going to fill in all of this is, what is your rent or lease? We do have questions down here. Okay. And so one of them is, what about a triple net lease? And so, George, for my client, that I'm going to work this up on, he does pay rent. It is triple net lease, but it's a catch-22. He pays one amount, $30,000 a month, and in that is an impound for taxes and insurance. However, on the bill, those numbers are split out, and because of our Medicare and Medicaid reporting, we have to report them separately on the P&L. So we have the true lease expense reported, true tax, and then a quote impound estimate for taxes and insurance, which then gets trued up with their fabulous calculations at the end of the year. So I think our professional call on this is that we will probably only include the true lease amount, but again, there might be some planning opportunities there for including the others if it's maybe not shown separately. I can't go change the historical financial statement, so I'm not going to get that deep. I don't think we're going to need it anyways.
No, but a planning item that could be there, George Valentine pays his taxes, let's say every December. And for simplicity purposes, let's just make it $4,800. For a planning purpose, those are part of, my rent, because I'm a triple net lease. Could I pay $400 and $400 to the taxing agency during those 2 months and then wind up still counting that towards the lease payments?
Okay.
And that could also, if your insurance is once a year, that's one thing. If your insurance is monthly, you've already got it covered. But could you pay your insurance at the same time, doing it during those 2 months to raise up that rent/lease expense to where it really should be?
Right, to include that as part of your lease.
The triple net lease.
Yeah.
But that's the planning side that we have to look at.
Exactly. Okay, so keep going through this. We just threw some numbers in here, but one of the keys we put on here was this number to make sure that you're keeping your 75-25% ratio balanced where you want it. And then this all totals up, and this other, George, I think that was other interest. Pretty sure that's misspelled. Okay, let me fix that. But it did say other, there was one that it said other costs, but I think it was other interest cost.
Well, it says other explain. That's what the application says.
Yeah.
So I don't know if anybody's ever got to the other explain, because that could be usually an accounting firm that's paper. And it doesn't have any remote employees. The other costs could be to buy notebooks for everybody to work from home.
Maybe, I don't know. I'm not going to go that far.
Well, but I'm saying that would be another cost that could be forgiven.
Okay.
Possibly as another cost. I'm trying to think of other costs that could be, they could be justified. I don't know what's in there that can be justified totally for other. I know the easy ones are payroll, rent, and utilities, but they do have a category for other, but you have to identify that in your loan application.
Erin's chatting me up. She's kind of ticked off right now with her staff. Look at them. Okay. I'll quiet that down. Okay, let's move on so we can get this recorded and then you and I can take longer. So one key that we put on here is how is your spending compared to what your loan is, right? Just kind of off the bat. My goal with mine is I'm wanting this to be dialed in and fully spent, at least on the plan. If we can achieve that, again, I don't have clients that have massive layoffs, but the home care agencies are starting to have to do that. So their hit it's been a little bit slower, but it's starting to hit now. So that'll change. Anyways, here are some of the questions. Paul on my team still really stands that mileage is not included in here.
I would agree, yeah.
We need and then there's been a big debate on how to calculate employee count. I had a bank verify to me, the bank that's doing this loan, that they are going to, per the SBA guidelines, they're going to look at baseline being the FTE count on the 215 payroll, which was not what we gave them during the application process. I feel confident we're going to be able to go back when it's time for forgiveness and true that up, because that's history, right? We've got payroll journals, it's fully supported, and we'll compare that to the employee count, the FTE count at the end of the 8 weeks. Not
the only flaw,
average.
the flaw that I see with FTEs on a specific date is if you're a seasonal type business.
Right, now that's addressed separately. So I just muted Slack because it was blowing up. and that's totally addressed separately. So my point there is I would love for us all to come to one consensus, but since they don't affect me, and what I was telling George before we started recording, I'm starting to have big Medicare payments come in for clients that have very strict stipulations on them, and people are going crazy, hundreds of thousands of dollars. I've got to get this nailed down for me so I can move on. So for me, I'm using 215, and I'll probably compare it. I'll wait for the bank, but I don't know if we're comparing to the last pay period of the 8-week period, or the last check date in the 8-week period, or are we comparing to 6/30, which is going to be past the 8-week period. So that's still to come. But anyways, we put some questions down here. So this is the plan. And then the next one is the actual, I took out the assumptions at the top. Again, you play with your FTE count here. And then these are actual numbers. So this doesn't work. It's not automated as much. It's not driven. This salary number is not driven based off of your employee count, but I still want to kind of track it every week if I can. I'm not sure if I can. We'll see how that works. I can at least track it every pay period, and so I may back it down to that. So anyways, that's what we put in. Then down here, and so it again, it gives us our average, not average, but our percent of spending. What I didn't put in. And then down here, I get into the forgiveness. And this is where I think it's good enough for me, but others might want a little bit more meat here, because I just started getting tired, and I think it works for me. But what I did was, okay, step one, did you spend all of the money? Our loan proceeds was this much, we spent this much, we're good to go. Glenn helped me with some if-then statements, so that worked. And then I carried that over here. So here's your loan before reductions, okay? Because you're gonna, that's how it's gonna work.
Spending
Okay.
amount like 400,000 in the 490.
Do what?
You had the 490,100, put 400 so that we have a difference.
Okay, so I'm just gonna take out this whole payroll. For whatever reason, they didn't get that payroll made. Okay, so now we do have a negative, and it's gonna flow over here.
Okay.
I was more worried about my if-then statements working than the regular, like it turning it to zero. That's why I left it like that, because I had it working this way. Then I was like, okay, let me bump it up, because I think, yeah, whatever. Anyways, okay. So then we're coming down to look at, so this column is the 75% payroll cost. Required you're required. So to me, the way I read it, of this amount that you did spend, is it 75% or more? Let me check that formula. Yeah. So here's 75%. Here's how much was payroll cost from above. So we've got no problem. Now, George, it's, if you want to toy with it, it's a lot harder to go up top and say, okay, let me take out more payroll, because it's a ratio. So the more payroll you take out, it doesn't just say, oh, let me take out another 100,000 of payroll and it's going to flip this ratio. It doesn't. It's weird. Anyways, it's numbers. Again, my baseline FTE, my final FTE, this is where you guys are going to want to figure out, are you going to use an average FTE? Are you going to use FTE at the end of the period? Which, the way I read it, it clearly says at the end of the period. Now, what that date is not clearly defined, but I don't read it as an average. So if you want to use it as an average, you need to fix this formula. And I put that down here. Again, if there was a decrease, it would be a percentage decrease. And so if I changed this number to 40, let's say 60, okay, that's a 15%. Oh, let me check this. Oh, that's a change of 15, which is a 20% decrease. Therefore, it's going to take your loan, this minus 20%.
Right.
So it's going to reduce 20% out of your loan, right? Okay, and so then this is what your forgiveness is going to be. What I could not figure out how to automate and calculate is this reduction of salary to any one person that's greater than 25% F2. So that's what I threw this other spreadsheet. Again, this was 6 o'clock yesterday. I was just tired. I was over it. And I said, well, let's just put something here. And so we need some formulas to pull it back into this. And I just didn't get that done. So kind of my comment, and I'll just wrap up this recording, is what I ask everybody to do is, if this works for you, great, use it. If you see a calculation error, if you see a methodology error, please let me know. Let's get the master fixed. If you want to take this and adapt it and make some other kind of changes for your clients, please do so in a copy. Like, you know, say, hey, this is great, but I need a monthly one. Okay, cool. Now, if you want a monthly one, we didn't do a monthly one, make a copy, make it a monthly one, make it a template. But if you want to take this and you want to say, look, I don't agree with FTE count, I'm going to do mine as an average. Don't change it here on my main copy. Change it, you know, make a copy and rename it somehow or what have you to make a change there. And then, but again, I am just one person, and if I have made a calculation error or a flaw in the actual application of things, I really want to know, because I feel like this is going to work for me, and this is what I wanted to see. So my next move is to do this for these 4 clients that I have. I know one of them has physically been funded, but it's the management company, it's real small. I want to do it for the other ones, and I might have to assume that they get funded on Monday, because I'm not sure they actually got the money Friday. Anyways, as I do those, I'm then going to write, and I think I'll just add it as another tab, but I'm not certain, kind of write the like instruction, how to, the parameters, kind of the, you know, kind of a process for your team to use. You may have to clean it up. You may have to go more detailed. I tend to go overboard on being way too detailed for a 3rd grader level on my processes. And we'll see what time allows. I'm not trying to write it though. I do not want this given out to clients. I am not giving this away for free. What I've done, I plan on kind of my thought process, and I haven't solidified it and I haven't pitched it to anybody yet, but my thought is, if you want the plan and you want to understand how to do it, I'll give you my worksheet and I'll give you a very high level how to, and that's $1,000, and it's on you, and you do it, and you do all your forgiveness application and documentation. if you, and I am not here for questions. I think I'm just gonna have to be really strict. However, for those clients that are like, I don't want to touch it, I want you to do it. I'm going to do $5,000 to implement this. At this point, I'm still not including the forgiveness package because I don't know what's included in that. And if it's documenting a shit ton of stuff, I'm going to get paid separately for that. And so that's kind of my soapbox on there. So the instructions I write here, I'll probably do 2 steps. I'll probably do detailed for internal staff, but then I'll probably do a high level that would be more client facing, because I'm not trying to train somebody how to do what we do. I'm very careful on that. So anyways, that's my 2 cents. Okay. George, you got anything to input before I stop the recording?
Nope, you've said it all.
Okay, cool. I'm going to stop the recording and we can keep hashing it out.